FinanceStrategy.com.
Hello, this is Daniel Grady with a quick look at the markets for today, Monday, March 17th. Coming up today at 10 o'clock GMT, we have inflation data coming out from the Eurozone. Investors are probably going to focus on this a little bit more given last week's remarks by ECB President Mario Draghi. Inflation is a key component for ECB policy. And then at 1 o'clock we have existing home sales from Canada, which could generate some volatility in the Canadian dollar and in Canadian stocks. At the same time, we also have long-term TIC flows in the United States. This is a gauge of financial instruments moving in and out of the United States and could be an indicator of world financial health, which, given the current risk environment, might get some investor attention and create some volatility. 15 minutes later, we have industrial production and manufacturing for the United States, two key indicators of the health of the American economy. And then at 2 o'clock in the afternoon, we have the housing market index for the United States, which is not expected to generate all that much movement. Moving over to the markets, the S&P 500 dropped by 0.3% on Friday. This was leading into a risky weekend when we had the vote for the Crimea, and we also had the continuing situation in China. Considering how the vote went yesterday, we have the increasing risk of the West putting sanctions on Russia, which could generate some more market uncertainty going through the week, and it could generate some more pressure on safe haven assets, and particularly natural gas and oil. So we could be looking, if you're trading any of those, you might keep a close eye on what's happening in the Crimea, because it could generate, any news from the Crimea could generate some movement in gold and oil and natural gas. During the Asian session, Asian stocks continued to move lower after we had continuing concerns from the Chinese economy. And S&P 500 futures at the moment are trading down by just over 0.1%. So we're looking at possibly a neutral to risk adverse environment starting at the beginning of the week. The euro, last week, the euro has pretty much carved a sideways trend here between 138.30 and 139.50. However, we have some important data today, so we could see a breakout above those two ranges. The pound for the last almost a month now has been maintaining its range here between 161.10 and 168. We have a short-term resistance here at 166.60. However, it's a low grade Fibonacci retracement, which doesn't hold all that much. And we don't have any major news coming out that would affect the pound. So movements here in this pair will mostly be driven by the dollar. The dollar yen, the yen is considered safe haven currency. So during situations of risk, we could see increasing strength in the yen, which would push this pair down. However, it has tried to break through 101.30 3 times so far in the last month or so, a little bit more than a month, and still has failed to do so. So 101.30 is becoming pretty much a strong support level here. Above that, we have resistance at 102.30. And then finally, we have gold. Gold on Friday continued to move higher. It's above support at 1,370. And then after that, we have resistance, and which is a strong psychological level at 1,400. And that's it for today. Thanks for watching, and happy trading.